4 months into this challenge, and for the first time, I'm sitting here with roughly a 22% drawdown. Most people expect challenge videos to only show the wins, the big trades, the huge profits. But honestly, I think this month taught me more than the previous 3 months combined, because I finally understood something that I had been struggling with for years. Not strategy, not risk management, not psychology, but something even deeper. Today, I want to show you what caused this drawdown and why I believe it may become one of the most valuable months in this entire challenge. Have you ever experienced this? You look back at one of your losing trades and ask yourself, why did I enter this? What was I thinking? The funny thing is, when you are reviewing the trade, the mistake is obvious. Crystal clear. You immediately know, I shouldn't have taken that. But somehow, 5 hours earlier, your brain looked at the exact same chart and thought, this looks good. Why? Because at that moment, you weren't actually seeing the chart objectively. Your brain was filling in the blanks. Looking back at my journal, I noticed something interesting. These were trades outside my strategy. They also weren't perfect setup. They were grey trades. Trades where I wasn't completely sure. Trades where part of me thought, maybe, look close enough, it will probably work. And because I had a fear of missing out, my brain started creating stories. It started seeing confirmations that weren't really there in the first place. I convinced myself that these traits belonged inside my strategy. They didn't. And they slowly dragged my win rate lower. That is the main reason for this drawdown. Not bad luck, not market condition, me. So this got me thinking, if I already know my strategy, why am I still making these mistakes? Then I came across something fascinating. Neuroplasticity. So years ago, scientists were studying stroke patients. They wanted to understand how people who had lost control of their muscles could learn to move again. Through repeated exercise, they discovered something incredible. The brain wasn't fixed. It was literally rewiring itself, creating new neural pathway, changing its structure based on what people repeatedly did, thought, and practiced. Today, we call this neuroplasticity, and this changed the way I think about trading. If our brains can rewire themselves, then that means we can intentionally build better trading habits. Instead of reinforcing FOMO, impatience, or impulsive behavior, we can train the subconscious mind to become a disciplined trader. One framework I found incredibly useful is in the acronym FIRE. F-I-R-E. Because just like forging a sword, you need fire to forge a better trading mind. You also need fire. F, focus. Your brain follows the clearest instructions available. If your rules are vague, your brain fill in the missing pieces using your existing programming. Imagine your trading plan simply says, when support holds, buy. Sounds reasonable. But what exactly is holding? Is it one candle holding? 5 candles of that time frame holding what? Which time frame? Is it a wick? Is it a strong closure above the wick? Or is that a retest? If you don't define it, your brain will. And if if your current programming is FOMO, guess what? It fills the gap. FOMO. The clearer your rules, the less room there is for your emotional interpretation. Intention. So before focus comes intention. Why are you even doing this? Financial freedom? Supporting your family? Escaping a job? Building something meaningful? Your brain performs much better when it knows what it's aiming for. Purpose creates direction. Repetition. Every habit, good or bad, exists because of repetition. You don't become disciplined by reading one trading book. You become disciplined by repeating disciplined actions over and over and over again. Eventually, they become second nature. Emotions. Emotion is the accelerator. The stronger the emotion, the stronger the learning. That's why, after every trade, whether I win or lose, I journal immediately. Because that's when the lesson is freshest. That's when my brain is most receptive. Instead of simply accepting this drawdown, I change my process. First, I now journal immediately after every trade, not hours later, not the next day. Immediately, because the emotions are still there. Secondly, I create something called a discipline scoreboard. Instead of rewarding myself for making money, I reward myself for following my process. If I skip a great trade, I give myself points. Even if that trade later becomes a winner, because I followed my rules. Likewise, if I chase a trade, ignore confirmation, or break my process, I lose points. Even if I make money, because good trading isn't measured by one outcome. It's measured by consistent behavior over hundreds or thousands of trades. So, why this matters? One thing I've realized is that every strategy has gray areas, even the best strategy in the world. The question is, how do you deal with those gray areas? You can either learn by losing money, or you sit down, observe, and journal it, and refine your strategy. One costs capital, the other builds wisdom. I would much rather pay with patience than with my account. Trading is a marathon. People often underestimate what consistency can do. Even if a strategy can win 46% of the time, as you can see from the spreadsheet over here, with a 3-to-1 reward to risk ratio, even a tiny account, right? A tiny account like this can compound into something remarkable over enough trades, like $5 over 20k, 30k easily. That's what the challenge has always been about. Not getting rich overnight, not gambling, not chasing excitement. It's about building a system. And more importantly, building the person who can execute that system consistently. So yes, month 4 ends in a drawdown. But strangely, I feel more confident than I did a month ago. Because I don't think I simply lost money this month. I think I bought experience. And if I continue rewiring my habits, instead of chasing quick results, I genuinely believe this drawdown will become one of the turning points of this entire $2,000 to $1 million journey. I will see you in month 5.